Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. The European Central Bank cut interest rates for the fourth time this year on Thursday. The ECB also kept the door open to further easing ahead as inflation closes in on its goal and the economy remains weak. The central bank for the 20 countries that share the euro reduced the rate it pays on bank deposits, which drives financing conditions in the bloc to 3% from 3.25%. It was at a record 4% only in June. It would also signal that further cuts are possible by removing a reference to keeping rates sufficiently restrictive. That's economic jargon for a level of borrowing costs that curbs economic growth.
The Governing Council today decided to lower the three key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. The disinflation process is well on track. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. We are not pre-committing to a particular rate path. The uncertainty that I referred to, stemming from the policies that would be decided by the next US administration, is not incorporated in the baseline. I continue to think that restrictions on trade, protectionist measures are not conducive to growth and ultimately have an impact on inflation that is largely uncertain. In the short term, it's probably net inflationary, probable, but the overall impact on inflation is uncertain because it is going to depend on the scope of the measures, on the retaliation that is decided, on the rerouting of trade traffic from other parts of the world. And that is a very complex situation with movable parts, which we will determine if and when they come.
Well, in the U.S. Thursday, Wall Street closed lower as investors evaluated key economic indicators ahead of the Federal Reserve's meeting next week. Trader bets on the cut next week, but they indicate expectations of a pause in January after several Fed officials last week urged caution over the pace of monetary policy easing as the economy remained resilient.
We're having a roughly flat to down day with regards to the major market indices. That's primarily being driven by the fact that even though it's a bit of a slow news day, we did have the PPI results that came out this morning that did note a little bit higher of a growth in those wholesale prices than what is expected. I mean, coming off the tails of CPI, which was from yesterday, which is a much more favored and regarded report. I think it's important to remember that we are seeing over the past year a drastic decrease in inflation numbers from the 5, 6, 7% all the way to being consistently below 3%, moving toward that Fed target of towards 2%. But there is a little bit of nervousness from market participants about maybe the Fed is cutting a little bit too quickly. And so you're starting to see certain portions of the economy heat up maybe a little bit too fast.
Meanwhile, China signaled more public borrowing and spending in 2025 with a shift of policy focus to consumption. That's in an effort to repair the economy's weak link as looming U.S. tariffs threaten exports. At the end of a two-day huddle of the Central Economic Work Conference in Beijing, top officials led by President Xi Jinping vowed to raise the fiscal deficit target next year in an announcement. According to the state-run Xinhua news agency, for only the second time in at least a decade, the officials made lifting consumption vigorously and stimulating overall domestic demand their top priority. Chinese officials also vowed to strengthen the social safety nets with broad promises to bolster health care and pensions. That's as the population ages and households squirrel away savings to cover fees in case of a medical emergency. But analysts said while the tone of the meeting was very supportive of growth, it lacked concrete details on policies.
As the first pillar in China's pension security system, basic pension insurance covers 1 billion people. Excluding the 300 million people who are already receiving pensions, there are still 700 million urban employees and urban and rural residents who are paying.
In 2024, China's macroeconomy has shown signs of stabilization on the basis of continued structural adjustment. And with the growth rate, the country will be able to achieve the annual target of around 5%.
American chipmaker Nvidia has added hundreds of staff in China this year to enhance its research capabilities and focus on new autonomous driving technologies. Sources tell Bloomberg the world's second most valuable company will end the year with about 4,000 people, up from just about 3,000 at the start of the year. In a key part of that expansion, Nvidia added about 200 people in Beijing to beef up a team of researchers working on self-driving. The U.S. company also enlarged its after-sales service and networking software development teams. Santa Clara, California-based Nvidia is expanding its headcount globally as it works to fulfill runaway demand for its artificial intelligence chips. China, subject to its U.S. trade curbs that prevent Nvidia from selling its most advanced semiconductors there, still yielded $5.4 billion in sales in the September quarter. The country remains an important market and a research hub for the U.S. chip designer, even as Beijing's local antitrust regulator this week announced a probe into Nvidia's 2020 takeover of Mellanox. Meanwhile, Canada said it could cut off energy supplies to parts of the United States if President-elect Donald Trump follows through on threats to impose tariffs on Canada when he comes into office. Ottawa Premier Doug Ford made the comments after Canadian Prime Minister Justin Trudeau this week said Canada would respond to unfair tariffs as it did during the last Trump presidency, when Ottawa added tariffs to goods including bourbon, Harley-Davidson motorcycles, and cherries. Ford's province, Ontario, does not produce any of the 4 million barrels per day of oil that Canada ships south of the border, but it does provide electricity for 1.5 million U.S. homes.
But we will go to the full extent, depending on how far this goes. We will go to the extent of cutting off their energy, going down to Michigan, going down to New York State, and over to Wisconsin. I don't want this to happen, but my number one job is to protect Ontarians and Canadians as a whole, since we're the largest province.
The federal government also discussed planned border security measures with the premiers, in line with Trump's demand for Canada to keep out illegal immigrants from entering the U.S.
On the gear, they're going to enhance gear, get more border patrol, more sniffer dogs, if you want to call them that, patrol dogs. They're going to make sure they have more drones and more opportunities to cover the border. They have asked us, and I have agreed that we will support them, again, temporarily, as long as it takes to get through this. But again, we emphasize the border is not our responsibility.
In another story, Japanese car maker Toyota will build a new paint facility at its factory complex in Georgetown, Kentucky. It's part of a $922 million investment. Construction will make it the second big addition announced this year at the automaker's largest global manufacturing plant. In February, the company said it would invest $1.3 billion at its Kentucky complex, in part so it can build an all-new 3-row electric SUV to be sold in the U.S. Neither project will add any new jobs at the facility, which now employs about 10,000 workers. But the Toyota Group said the investments reinforce its commitment to long-term job stability. The new paint facility, scheduled to open in 2027, will add 1 million square feet of capacity while decreasing carbon emissions by 30% and water usage by 1.5 million gallons per year. In 2026, Toyota will also start producing EVs for the first time in the U.S. at that plant in Kentucky. The November's election of Donald Trump, who has criticized electric vehicles and threatened to scrap a tax credit for them enacted by President Joe Biden, has forced Toyota and other auto manufacturers to either decide to double down on their investments or downsize their U.S. operations. Now we'll take a breather here, but in the next moment, business and economy news from the Philippines. Stay on BNC and follow the money. Welcome back to Follow the Money. Filipino-Chinese business leaders express concern the ongoing political tensions in government could discourage foreign investors. Their appeal to the government in this report by Sujin Kim.
Political instability and growing tension in the Philippines are sounding alarms among the Filipino-Chinese business leaders who warn these issues could undermine investor confidence and stall the country's economic growth. With the 2025 elections fast approaching, they emphasize the urgent need for stability to maintain the inflow of foreign investment and protect the country's reputation as an investment hub.
If the international news in the Philippines is mostly about military exercises and territorial disputes, that might scare away some foreign investors.
We want politically to be stable, to be peaceful. Whatever tension is projected, is perceived, mawawala yung mga foreign investors. And that is not good for business. Ang mga negosyante, masyadong sensitive yan, masyadong takot. May konting gulo, aalis na yan. Kasi marami pang pwedeng puntahan.
Beyond political tensions, business leaders are also grappling with issues such as high electricity costs.
Minsan yung mga malalaking industry hindi makakapasok because they cannot get enough power. Power is always a problem.
Despite these challenges, the Filipino-Chinese business community remain optimistic about the Philippine economy, also with the support from government to foster a business-friendly environment.
The advantage of the Philippines, we have relatively young population compared to our Asian neighbors. So there's more dynamic growth in the Philippine consumer spending. So maybe food, clothing, consumer spending, lifestyle, all this will be very good.
In the world, Asia is now the growing region in terms of economy. Very optimistic about the economic outlook because the government is doing some programs, good programs to encourage foreign investment.
They also emphasize the need for stronger cooperation between the Philippines and China in time for the 50th anniversary of China-Philippines diplomatic relations next year. Sujin Kim, BNC.
Meanwhile, listing state-owned companies on the Philippine Stock Exchange could breathe new life into the country's sluggish stock market. That's according to the Organization for Economic Cooperation and Development, or OECD, in its capital market review of the Philippines. The OECD says listing companies like the Land Bank of the Philippines and the Food Terminal Incorporated can expand the country's public equity market. It adds, state-owned enterprises are listed in other countries, and these contribute significantly to market capitalization. Doing so could also improve the performance of state-owned enterprises, as they will be subjected to stricter transparency requirements. There are more than 100 SOEs in the country, with total assets worth more than 11 trillion pesos. Syrians have begun openly trading their liras for foreign currency, an act previously outlawed under dictator Bashar al-Assad. Independent trading in foreign currencies could previously land someone in jail, but has become common practice in everyday transactions since Assad's ouster. Signs were seen in several shop windows in the Syrian capital of Damascus Thursday, advertising money exchange services. Now, before street protests against Assad's rule erupted in March 2011, the Syrian pound stood at around 50 to the dollar. It is now at over 15,000 to the dollar, turbocharging inflation that leaves many shopkeepers struggling to price their goods.
I am comfortable. This is an honorable career. There is nothing wrong with it. Today we are buying $1 for 14,500 Syrian liras and selling it for 15,000 Syrian liras. That I was arrested once because of this job and was wanted in different branches, including state security, criminal security. I used to work from home, exchanging money, throughout the corrupt regime's rule. I used to exchange money, but secretly. This has been our business for a long time. It used to be my father's. We worked secretly and spent our day working and bribing police officers so they won't come in and search us.
This is freedom. May God deprive those who deprived us from everything. We hope for it to the start of something good for everybody.
Meanwhile, Korean Air has completed its protracted purchase of its rival Asiana Airlines. In its major step towards forming one of Asia's biggest carriers, the $1.3 billion M&A deal was first unveiled 4 years ago to rescue Asiana as it struggled during the COVID pandemic. Korean Air clarifies Asiana's integration would not include layoffs. Tech giant Amazon is planning a $1 million donation to President-elect Trump's inaugural fund as founder Jeff Bezos and other tech leaders shore up ties with the incoming administration. Sources tell the Wall Street Journal the donation is being prepared as Amazon's executive chairman is due to visit Trump at his Florida home next week. Bezos and Trump have long feuded, in part because of Bezos' ownership of the Washington Post. Bezos once offered to send Trump to the moon via his space company as an insult. On Thursday, another billionaire, Mark Zuckerberg, directed his Meta platforms to make a $1 million contribution to Trump's inaugural fund. Tesla and SpaceX owner Elon Musk's net worth is now more than $400 billion. That's according to the Bloomberg Billionaires Index. The spike in Musk's wealth reportedly came after SpaceX and its investors agreed to purchase more than $1 billion worth of insider shares that value the rocket company at about $350 billion. Bloomberg said the transaction increased Musk's personal wealth by about $50 billion to $440 billion. His wealth already spiked after Donald Trump won last month's U.S. presidential polls. Finally, Donald Trump rang the opening bell of the New York Stock Exchange on Thursday, the same day he's officially named Time Magazine's Person of the Year. The Republican president-elect built his fortune as a New York real estate investor before turning to politics. During his first term as president, he measured his success in part by the strength of the stock market, which has so far welcomed his re-election. Time bestowed the Person of the Year title to Trump once before, in 2016.
Well, thank you very much. This is an honor, a tremendous honor. I brought some of our compatriots along with us. They're going to do a beautiful job for you for the next 4 years. And it's really been something very special. And I have to say, Time Magazine getting this honor for the second time. I think I like it better this time, actually. But it is an honor. And this is a double because usually they don't coordinate the Man of the Year or the Person of the Year with the ringing of the bell. And brilliantly, you picked them both at the same time. So, ladies and gentlemen, go on. We're going to put it straight. We're going to give tremendous incentive like no other country has. We're cutting your taxes. We're going to cut them very substantially. We got them down to 21% from probably 42 or 44%, depending on where you are. And we got them down to 21. Everyone said that was a miracle. Now we're getting them down to 15, but only if you make your product here. Otherwise, you pay 21, which is not bad. It's in the middle of the pack, but 15 brings you down to among the low. For those that are running the big companies, those great, big, beautiful companies, nobody's going to be leaving us. You're going to be coming back. You're going to be bringing it back to the United States. We are incentivizing everybody to come back to the United States. We want you back here. Car manufacturers, everybody. And we have one product that nobody has really to the extent that we do. It's called oil and gas. There is no country in the world that has more. We're number one. I brought it to number one during my first term in terms of production. We're going to be number one plus. We'll do numbers that nobody will really see before. And when that happens, prices are going to start coming down because people can't afford their groceries, and they're going to be affording their groceries very soon.
Time magazine named Democratic President Joe Biden and Vice President Kamala Harris Person of the Year in 2020 after they defeated Trump. Pop star Taylor Swift received the title last year. And that's it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News Channel. Always on top.